Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase, a podcast where we focus on market events that we believe truly matter. Now it's the start of a new week and I'm sure many of you can't wait to put the past week behind us, especially when it comes to the US technology sector. However, stepping back and looking at the slightly bigger picture can help add some perspective that we think will be useful as you think about how to navigate markets in the week ahead. Now, first up, the pullback has been largely led by US markets, with the S&P 500 down about 6% for the week, that compares with about 2% for the Euro Stoxx 600 in dollar terms, and about 1% for the MSCI Asia Pac ex-Japan. Hong Kong's Seng was actually up for the week. Now, this makes for an interesting comparison with a what's priced in view. In the US, the concern seems to be very much on how far the Fed could go. Earlier this month, the market narrative was about whether the Fed would indeed hike 4 times in 2022. Last week, more than 4 rate hikes were indeed priced in, and the narrative was starting to question whether there could be more, with chance of another rate hike in May, oddly enough, being increasingly priced, or in some cases the debate being whether some of the hikes could be larger, of 0.5% instead of the 0.25% the Fed usually undertakes in each rise. Now, this contrasts again with China and Hong Kong equity markets. Like I said, Hong Kong's Hang Seng was up about 2% or so for the week because policy expectations in China are the polar opposite. Main question here being whether further PBOC easing was in the offing. Now, from a technical perspective, the S&P 500 is testing its 200-day moving average. We know the tech-heavy Nasdaq fell below this level, though here we'd remind you once again, this isn't unusual. I came across one report this weekend that noted Nasdaq has had 11 10% plus corrections during the broader bull market since 2009. Now, when you put all of this perspective together, we can't help wondering if the pullback and the Fed narrative is beginning to go a little bit too far. For a start, we'd actually start looking for opportunities in the Hang Seng, which faces a much more supportive short-term technical and positioning picture. We're already beginning to see signs of that playing out, but take a look at our weekly market view publication on our LinkedIn Wealth Insights page if you want to take a look at that chart. In the US, the Fed meeting may be the key event that governs whether these levels are indeed the best buy on dips opportunity or if we have yet another leg lower to go. Now, from the Fed comments themselves, what we look for is any signal that helps confirm market expectations or otherwise helps bring a bit of a sense of calm. That could be quite key with both the S&P 500 and US tech at interesting levels from a technicals, positioning, and comparison to past drawdowns perspective. That very well could be the buy on dips opportunity we've been waiting for. Now, that might very well be the main event of this week, especially the Fed meeting, but in terms of other data events, there are a few things we'd still keep an eye on. First is, of course, the ongoing tension in Ukraine. The main risk here is that any escalation could feed through quickly into energy prices. We also have PMI data across several major regions, which could be a good gauge on the growth recovery, which again, we shouldn't lose sight of. And finally, like me, if you're based in Singapore, we have the release of the December Singapore CPI inflation report. And that, of course, can help place a bit of a gauge on how much all the global inflation pressures we've been talking about are feeding through to prices closer to home. So it's an eventful week ahead, but we'll take a stop there. If you enjoyed this podcast, please don't forget to rate and like it. Thanks again for listening, and we wish you a happy trading week ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.